6. Good morning, Wayne. Good morning, Ron. We made it, guys. Good morning, Jeffrey Dean. Good to see you. Hope everybody had a good New Year's. We'll be doing a fingers and toe count. Make sure everybody is still good after fireworks, if that was your thing. I had a blissful slumber on the couch. Slept right through the new year. It was great. Guys, remember that this is an education room. That is the sole purpose of the room, is to help you take this amazing software that you've acquired and learn how to read it, learn how to read your indicators, learn how to recognize advantages, learn how to turn those advantages into trades. But before we do that, we're going to check news, because news lets us know when our patterns may get disrupted, when the market may spike, may jump, may bump, may do things that it doesn't normally do, guys. Today is Friday, January 2nd, and at 9:45 there is some low impact, not worried about it, couldn't care. Let's just look for the rules to be met kind of news. But I do go to forexfactory.com/calendar each and every day. That's my first stop, just to make sure that there's not something going on. As we move through the day, we will be talking about both platforms, guys. We will be talking about NinjaTrader. We will be talking about TradingView, apples and oranges. So if you're a NinjaTrader user, pay attention to the NinjaTrader section. If you're a TradingView user, then the TradingView section is for you. I always start with NinjaTrader just because we've got the most time in the saddle there. And I've got a slideshow. So it's a little lecture-y on the first part of the classroom, guys. I'm okay with that. We're going to go through and we're going to talk about rules, and we're going to focus on learning to read our indicators. And then the second half of class will really just revolve around whatever you guys need it to be. This classroom gets exponentially better when you all ask questions, when the people in the room post pictures, when you say, hey, Mark, there's this thing I'm working on, I need a little help. Because what happens is we get awesome lessons for everybody. There are no stupid questions. You can't ask the same question too many times. If you are hard-headed like me, sometimes it takes hearing it 15 different ways before it sticks. I'm cool with that. But the goal is to learn to read your charts. Because once you read your charts, guys, and we try to make it as simple for you as it possibly can, I'm going to hand you trading plans. And these trading plans aren't like the only trading plans. These trading plans are what we consider a stepping stone in your learning journey. So I'll show you the KISS plan for NinjaTrader. And I called it the KISS plan because you got to keep it simple, stupid. I usually don't say stupid, but today I'm just wound. It's a stepping stone, guys. This is like the first way. This is getting out of high school, maybe starting college, finding your way. This is just designed to teach you how to read your indicators. And the trades on this plan are designed to optimize your chances of success. And I want you to grab hold of and love on that phrase, optimize your chances of success. Give you the highest chance of success for winning more than you lose. That's what we're focused on. And then you will craft a plan. It'll be tailored to your goals, the way you read your charts, the things that stand out and appeal to you, but that's going to come from your ability to read the indicators. So what we're going to do is we're going to keep it really simple. On both of these plans, whether it is NinjaTrader or TradingView, there's only 3 rules for a trend trade. That's it. You're going to try to complicate it because you're human. I'm going to encourage you to avoid those complications. It only takes 2 charts. And what we're doing is we're building a foundation. We're learning to read indicators with the intent to recognize advantages, because advantages are what create a trade. You're going to find that 90% of your day, especially if you've been watching the market this morning, 90% of your day is doing nothing. It's just sitting on your hands going, man, I wish I was doing something. Find a way to distract yourself. Get a game on your phone, play solitaire, whatever. 10% of your day, well, that's going to be trading. That's going to be you saying out loud, yelling at your computer screen, I have what I need to enter the trade. My rules are met. And when I take this trade, I'm taking a trade that I have proven through my study wins more than it loses. That's an edge. And guys, once you get into the mindset that it's chart reads that take you where you want to be, you're going to understand where the market is likely to continue. You will understand where the market is likely to go, and you're going to understand where the market is likely to stop. Now, I'm going to show you this picture right here. I built this one because this is what the market does. The market trends up, there's typically a fight, and then it continues a trend or it reverses. And then the market trends up, comes back down. Typically, somewhere in that trend, there's a fight, and then it goes. With your chart reading, when you begin to recognize where the market is likely to continue, you're going to pinpoint where these little fights are most likely to be lost inside of a prevailing trend. When you learn to read your indicators, you're going to understand that from that fight point, the market is likely to go to the next key level with all those advantages in place. And then most importantly, you're going to understand where the market is likely to stop when the market gets to those key levels. And your trigger lines say, hey, no more. You'll be like, whoop, I'm done. I'm going to go walk the dog. I'm back in that 90%, guys. And you're going to have these three concepts and you're going to understand them clearly through some very basic chart reading. The path to get to where you want to be has been consistent. Nexgen has had live trading rooms since 2000, I believe, almost 25 years now. And posting in the room is always the best way to get what you need, guys. Post in the room. Take pictures of your trades. Take pictures of the charts with questions. Get them in the room and say, hey, Mark, I need help. Or, hey, Mark, give me a little feedback. Hey, Mark, what do you see? And what happens is you get a private session with me. So learn the rules. Practice the rules. Commit to the rules. Guys, your rules just describe a pattern that you can prove wins more than it loses. And keep it simple. Those plans that I give you are focused on keeping you focused on the absolute best because there's more out there. But until you understand the basics, it's a little more difficult to find. Learn the looks. Learn the look of the pattern that gives you the edge. This is Ninja Trader. This is 3 rules. This is your high probability trend trade. This is a trade that typically wins 70 to 80% of the time. Each rule, when true, provides an advantage. So rule number 1 will give us momentum. Rule number 2 will give us a clear path. Rule number 3 defines your entry. These 3 rules happen on 2 charts. There's a big chart and a little chart. Your big chart is a slow chart. It shows the overall opinion of the market, and it takes the most current bar, the first bar, just one of them. You'll be able to define direction, momentum, and areas, guys. Your first 2 rules are met on the big chart. Your small chart is nothing but an entry chart. It shows the inner workings of that one bar that give you 66% of your advantages. This is how you'll pinpoint where the market is most likely to continue. This will allow you to reduce risk. It's going to help you get in furthest away from your targets, which maximizes profit potential. We use the 2 charts because you're not in charge and you never will be. Think of your large chart as a large crowd. These are the men and women with the money and the influence, the power to create trends, to establish momentum. This is the same group of people that react at key areas. They lead the way and they typically win. Your small crowd, small chart, they fight. They create that fight. We love these guys and gals. They still have more money than us. But we can pinpoint using rule number 3 exactly where their fight is most likely to be lost. And when they fight the large crowd, they typically lose 70 to 80% of the time. So it kind of goes full circle. When the large chart gives you rules 1 and 2 met, you're just going to pinpoint where the market is most likely to continue for that highest probability trend trade. Both of your charts will have areas. Areas are going to be lines on a chart. Areas can create a bounce. That's the easiest way to think about it. If you see a divergence high or a divergence low, you know that there was a loss of momentum. Right at that number, that line that's produced becomes a line in the sand that could create a bounce. Fibonacci resistance can stop an uptrend. Fibonacci support can stop a downtrend. Yellow 1-to-1s could stop an up or a downtrend, just depends on which way the market is moving. All of these lines have the ability, the potential to create a bounce. I'm going to teach you a recipe to know when you shouldn't be trading directly into them and when you should be trading from them for entry. All you have to learn is the names. That's it. Divergence highs, divergence lows, Fibonacci resistance, Fibonacci support, yellow 1-to-1s. We're also going to use triggers. Triggers show up in everything. Small triggers are the two solid lines, large triggers are the two dashed lines. When they are green, they're going up. When they're red, they're going down. The same is true of the background. When your large chart background is green, the trend is up. When the background is red on your large chart, the trend is going down. The path of least resistance is going with the trend. The trend is your friend. It's the oldest cliche in trading. We're going to use trigger lines first to define momentum. Strong trigger lines is rule number 1. We're going to use trigger lines to define termination conditions, areas that we should not be trading into because they could stop the market or create a big untradeable bounce. And we're going to use large trigger lines to pinpoint precisely where the market, where the small crowd is most likely to fail and continue with the direction the large crowd provides. All you need to know about these multifunctional tools is that these are small and these are large. And we're going to use triggers and areas. And we're going to define the highest probability trend trade that Nexgen has ever taught. Everything starts with rule number 1 because it would be silly to start with rule number 2. Rule number 1 says that your large chart needs strong trigger lines because I insist on the advantage of momentum because I only trade with an edge. Strong trigger lines is pretty easy. When the background is green, the small and large triggers are green. When the background is red, the small and large must be red as well. Strong triggers is one look, guys. It is separation between the small and large. So in an uptrend, your small triggers will break above and away from the large triggers. The space created lets me know that the odds are favorable for the market to continue in the direction of the trend. In a downtrend, smalls break below the large triggers. That separation, that space, that gap, whether it is a little bit or a lot of it, lets me know that the odds are favorable for the market to continue down. If there is no space between the triggers, you're not allowed to say the triggers are strong. So it's one look. And strength goes away when space goes away. When the smalls return to the large, this is what we call weak triggers. And weak triggers let me know anything can happen up or down. With weak triggers, very often you'll see a market that retraces from the middle of nowhere. With weak triggers, very often you'll see a market that, wow, look at that, that just has a big, ugly reversal. Key areas are more likely to hold. There it is, weakness right at a fib, weakness right at a fib. And guys, this happens over and over and over. And a lot of you are asking, well, why did Mark put those lines there right where the market turned? I didn't. Those lines were already there, and you knew about them before the market ever got to them. And in a lot of instances, those are what we call termination conditions. Nice segue to rule number 2, right? Is everybody cool with strong triggers though? It's just separation between the small and large. It's a gap. That's it. Has nothing to do with price bars, nothing to do with areas. It's just one look on the most current bar. So check it out. The most current bar. Smalls below the large, space between. That's your look. Odds are favorable for the market to continue down. Rule number 1 is met. It's that simple, really is. If the market were here, smalls inside of the large, weakness, rule number 1 not met. Let it be that black and white, guys. It'll make trading so much easier on you. Once you have momentum, it's important that you're not trading into a brick wall. We call them termination conditions, and termination conditions are just horizontal lines on your large chart where the large crowd is making decisions. It's where the buyers buy and the sellers sell. These lines on a large chart are where fights happen, where untradeable bounces occur, and very often where reversals come from. And there's a very, very simple recipe to define one of these lines as an area that should not be traded directly into. When price, the large crowd, pushes the market up to Fibonacci resistance, yellow 1-to-1s, divergence highs, all you have to do is out loud ask yourself, hey, where are my triggers? And if both small and large triggers remain below that area of resistance is a termination condition. That termination condition could stop the market. It could create a big ugly bounce. It could reverse the market completely. You'll never know what's going to happen. So if price reaches an area of resistance and the triggers remain below, rule number 2 is not met. There's something in the way, which means no trades into that area. Very often, if you're already in a trade, that's where the market was likely to go. And now it's exactly where the market is likely to stop. Market comes down, price reaches Fibonacci support. We're done with price. Now we look to the triggers. Small and large triggers remain above support. Support may stop the market and create a reversal, an untradeable bounce, or you know what? It could even break. I'll never know what the reaction's going to be. So my plan, hopefully your plan says, if price, look at this, reaches an area and the triggers don't break, just don't initiate a trade into that area. If it reaches yellow 1-to-1s, a divergence low, don't initiate a trade into that area. That area could create a big, ugly, untradeable bounce. There it is again at yellow 1-to-1s. Here it is pulling back to resistance. Every trigger line is below. Resistance never had a chance. Up at the top, oh, look at that. They had momentum and they still went down. We'll talk about that. Resistance, no triggers. Support, no triggers. Guys, over and over, you're going to know about these areas long before you get to them. All you have to do is say to yourself, my advantage is gone. I choose not to trade. Let me wait. Let me see what happens. Everybody good with that? Learn this right here. Price reaches, where are my triggers? If everything that I do for you guys revolves around phrases. Separation is strength. No triggers, no trade, right? I'm trying to keep it easy. Well, areas break all the time. It's crazy how much areas break. So this is what it looks like when they do. First, number 1 on there, you see the red stop. Says price reaches support. Triggers still above. This is a termination condition. Wait to see what the reaction is. I'm going to tell you right now, new users, this is the most broken rule. Trading directly into areas, because this is the rule that's going to keep you patient. If it's really going to break, if the market's going to continue down, your small triggers will lead the charge, guys. Your small triggers will absolutely smash through that area, typically with a great deal of momentum. And when both of your small triggers make it south of support, but both of your large triggers still remain above, we call this a 50-50 look. Very clever, right? 50% of your triggers are below, 50% of your triggers are above. This 50-50 look lets me know, hey, support has the potential to break. It's not broken, which means we're still not high probability, but there is an enormous amount of opportunity with the potential to break. That is the second trade on the plan that I gave you. These trades, because the area is not broken, must be managed a little more assertively. A clear path happens when both the small and the large triggers get below support. Once they're both south of support, support begins to behave as resistance. My path is clear and my path remains clear until I reach the next area. And once I reach the next area, I go right back to number 1. I say, okay, no trades into those yellow 1-to-1s. Let's wait and see what the reaction is in an uptrend. And I like this. Price reaches support down here. None of the triggers break. And guys, that's where the reversal comes from. Right at that pretty blue fib. and then they start railing north and they hit resistance and every trigger is below. And for that moment in time, and it doesn't look like it was very long, everybody in this room says, hey, price reached resistance, my triggers haven't broken. I'm going to wait and see what the reaction is because I'm not in control of the market. Guys, it's either going to bounce, it's either going to reverse, or it's going to break. And if it breaks, or at least has the potential, small triggers tell the story. Your small triggers will smash through that area. It now has the potential. I can look for opportunity. It's going to be managed assertively because my path is not clear until all 4 triggers get above resistance. But when they do, resistance behaves as support. My path is clear. Rule number 2 is met. I am chomping at the bit to look for an entry. I want you to see something pretty cool here. Resistance breaks and behaves as support. Resistance breaks, behaves as support. I think we saw some back here too. Support breaks, behaves as resistance. Resistance breaks, behaves as support. Does everybody see that? Pretty cool, right? Support breaks, behaves as resistance. And guys, you know about these long before you get to them. Does everybody see that blue fib? That might be a target. You know about it. If the market gets to it, you have a recipe to not trade into it. I'm telling you, if you learn the basics, trading becomes effortless, guys. There will be times when you can't get a clear path. I think we just saw a great example right here, didn't we? Price reaches support, the triggers are above, it has the potential, and then damn it, it hits another fib. And it has the potential, and arg, it's still not broken. It's 90% of your day, my friends. 90% of your day. Just waiting, being cool, hanging out, saying, you know what? This futures market trades billions hourly. I don't have to be the first one in. I don't have to be the last one out. I don't have to fight trend. I don't have to fight triggers. I don't have to trade into areas. I need to find a way. You ready? I need to find a way to consistently make $400 a day. That's it. Because $400 a day times 252 trading days in a year is a 6-figure income in markets that trade billions hourly. You need to find a way to capture 400 throughout the course of the trading day consistently. Here's the cool thing. Take that 400, like if you're a Nexgen Pro Trader funding, John will let you copy up to 5 accounts. That same $400 turns into $500,000. People using these copiers going in saying, I don't have to make $5,000 a day. I can make $1,000 a day 5 times over. I can make $200 a day on 10 different accounts. And guys, it's about taking the absolute best, highest probability trades. Having an edge is what produces the results. It's a process, and the process starts with strong triggers. And when the triggers are strong, and only if the triggers are strong, I make sure there's nothing in the way. And if my path is clear and there's room to targets, I'm going to go define my entry. The entry, rule number 3, is specific to a trend trade. Once you understand momentum and path, that's what opens the doors for the rest of the trades. I'm going to tell you guys this right now. The entry area, this first trade teaches you how to define entries. It teaches you how to put stops in the right spot. And it's a very, very specific way to take this trade. And I'm going to give you this. And I'm gonna wish and hope and pray that you guys latch onto this phrase. Because your entry, once you learn this rule, these rules, put you right where you need to be. You will call your shots. You will wait for the market to come to you, and you'll actually use a limit order. You'll wait, and you're going to buy or sell a pullback. And just a friendly reminder, the pullback is that little fight in an already established trend. That little fight in a market with momentum, that little fight that comes when you have a clear path. And you're going to use a limit order to buy or sell that pullback at an area because horizontal lines can create bounces. And that area has to be inside of triggers. So your one breath phrase, I'm going to buy or sell a pullback at an area inside of triggers, and you will never miss your shot because triggers let you know where the fight's likely to go. Areas inside of the triggers are where the market is likely to bounce, and the pullback is what gets you there. So it's just a pattern. It's the same pattern, whether it's a high probability trend trade, whether it's a medium probability trend trade. When you're trading that potential, the reversal bar begins the pullback. It starts the fight. It's not your entry. You'll define exactly where the fight, the retracement, is most likely to go using those large triggers. There are large and synthetic, two sets of large triggers on your entry chart. One from the small chart, the smooth ones, and one from the large chart, the stepped ones. These are moving averages, and there's this cool mathematical phenomenon that is beyond my grasp called the regression of the mean. And it says that these numbers like to come back to the average. So trigger lines define where those down bars are most likely to go. Areas inside of that trigger range, from the top to the bottom. This is where the market's most likely to bounce and continue with the large chart trend, with the large chart momentum, with the large chart clear path. Because of the large chart advantages, your job is going to be to muster up the courage to activate a limit order just above the highest point of support and just wait. You've done all you can do. And if they come, you are in a high probability trend trade. And because you have defined where the market is most likely to continue, you have also defined where the market should not go. Guys, if that small crowd can push through the areas inside of triggers, if it can blast beyond the bottom of those triggers, that retracement area, guys, you've lost the advantage of rule number 3. That rule's no longer in play. You no longer have that edge. This is where the market should not go. This is where your initial stops will be placed, and this is where you will cut ties with a trade that typically wins 70 to 80%, which means if you are following rules 20 to 30% of the time, your stop will be hit. 20 to 30% of the time, you will take a loser. It's a cost of doing business. It is not a failure. It doesn't mean that you did anything wrong. It just means that the market in that instance did the wrong thing. In a short trade, reversal bar starts the pullback is not your entry. That's the beginning of the fight. Trigger lines define where that fight's most likely to go. Areas inside of trigger lines define where that fight is most likely to be lost. Your job is to activate a limit order just below the lowest point of resistance inside of those triggers and hope that the small crowd gets there, understanding fully that once you go beyond those triggers, you don't know if, when, or where that market's going to reverse. The advantage is gone. Stops are in place. The cool thing about that stop placement is the initial stops might seem a little big, but it's where the market shouldn't go. Once I get a down bar in a short, a reversal bar down, or an up bar in a long, my new stop is just a couple ticks above. And it's not uncommon to see you guys sniping that top tick. Pete did it, what day is today? Wednesday. Had multiple trades where he sold the bottom tick, where he bought the high tick and had maybe 2 or 3 ticks of risk on a trade once it got going. It's pretty amazing to watch you guys do that. And it all comes from a pattern. That's it. When the large chart says up, I'm choosing to go up with it. When the large chart has momentum, and only when the large chart has momentum, I'm saying to myself, oh man, let me see what my path looks like. This was the last line reached. 2 of my triggers are above it. It has the potential to break with all that momentum. So I haven't reached the next area. I'm good to go. Let's go find an entry. The market's trading all the way up here at 59.45. There's my reversal bar, not my entry. There's my trigger lines, not my entry. There's my highest point of support inside of triggers. That's my entry, guys. That's the entry for the highest probability trend trade I could ever take. And check it out. This is where the market is most likely to continue at the area inside of triggers. It looks like a tail on the large chart. You're going to predict where that tail is most likely to form with the small chart. This is where the market is most likely to go with all that momentum. That's going to be a target. Until a line gets hit, it's a target. It's not a termination. And then when price reaches that area and the triggers are below, well, that's precisely where the market is most likely to stop. So if I'm not already in that awesome trade, I'm not taking the next one. And guys, it's the same pattern. That's from November. Same thing from 2021. Same thing from 2022. If you want to study the pattern, if you want to commit it to memory, I'm going to give you the Nexgen tracking sheet. There it is right there in the chat box. 50 pictures of strong triggers so you don't make a mistake. 15 pictures of a clear path so you don't make a mistake. How to define your entry. Advantage, advantage, advantage. That equals a trade. Disadvantage, weak triggers, not looking for a trade. Termination conditions, not looking for a trade. The next tab, about 450 pictures of that pattern. And if I click on it right there, momentum, potential to break, pull back to the area inside of triggers, get paid. Nice trade, Pete. When was that from? That was 2025. That was around June 2025. Nice, Pete. Nice trade. And guys, that's it. That's the high probability trend trade. That's your foundation trade. That's the one that teaches you to read your indicators, guys. That's the one that teaches you to use this software to identify advantages so you can turn those advantages into trades. Are there any questions? I'm trying to go a little slow today just because I don't know what the market's going to do. And the fact that nobody's posting pictures lets me know that it's not doing much. Now here comes TradingView. TradingView is the other platform. If you're working with Nexgen Pro Trader Funding, you're probably on TradingView. The plan that I give for TradingView, the KISS plan for TradingView, is designed to optimize your chances of success with TradingView. It is a stepping stone in your learning journey with TradingView. It's designed to teach you to read your indicators on TradingView, guys. And it's still only 3 rules. And it's still only 2 charts. But on TradingView, it's minute charts. It is a 15-minute and a 1-minute. Big chart, little chart. Big chart defines direction, momentum, key targets, areas. Little chart will define the immediate strength of the market. I'm going to teach you how to not fight it, and it's going to define your entry points. And the trend trade that I'm about to teach you is the same trend trade that Nexgen was teaching 20 years ago. Well, 21 now, right? Trade number 1 was waiting for the fight, hitting an area, and entering with the close below the triggers, guys. And we're doing the same thing. Why? Because it works. Because it's worked for 20 years, and I can't think of any reason why it can't have the potential to work for another 20. This is the easiest trade you will ever take on TradingView. Your large chart has 2 trigger lines. That's it. It's just small triggers. When they're cyan, they're up. When they're white, they're down. Your small chart has the 2 sets. It has small triggers and large triggers. You can use these to define strength. Your small triggers are the same. Cyan is up, white is down. Your large triggers, green is up, red is down. We're going to use these to define the immediate strength of the market. TradingView has areas, T3 indicators. Guys, if you're a T3 owner on NinjaTrader and you want to come over and trade TradingView, you own the indicators. All you have to do is get TradingView. There are divergence highs and lows. These are that loss of momentum. They can be used as targets or they can be used as termination conditions. You're going to see 1-to-1s. These can be used as targets, as termination conditions, or we can use them on that small chart for entry. Mid bands can be targets, termination conditions, or on the small chart can be used for entry. Outer bands, this is kind of the new one. These are areas of exhaustion. These are going to be targets and termination conditions. Guys, learn how these can be used, and then let's use them to take a trend trade. 3 rules, that's it. We're going to define the trend. We're going to make sure that there's absolutely nothing in the way. Your first 2 rules are the same rule, guys. How important do you think it is to have a clear path if 2/3 of your advantages come from having a clear path? And then we're just going to buy or sell a pullback in an area, and we're going to wait for a close on what we call the correct side of the triggers. So direction comes from the small triggers on the large chart. If they are going up, your job is to go up with them if you are following the SKISS plan. If they are going down, the trend is down. We're looking for rules to be met for short trades. It is tempting to fight those triggers. It is tempting to say, hey, they almost rolled. But guys, when they're going down, the market tends to go down. Does everybody see that the triggers are down? Only looking for short trades. How's that for a big honking bar? Once I define direction, rule number 1 says on the large chart, the 15-minute chart, I'm not trading directly into areas. What does that mean? That means when I look at these triggers and they say up, I'm going to look at where price is and I'm going to say, do I have room before I hit a wall? Do I have room to targets? Do I have room to make money? Is there anything in my way? And if the answer is no, there's nothing in the way, there's room to make money, then and only then do I go to the small chart. Now to define room on the small chart, you're going to have to learn the entry. So it feels like it's the cart before the horse, but it's really not, guys. You're going to pick your area where the entry is going to come from, and you're going to say, is there room from my entry point to something that could create a bounce? If the answer is yes, you're going to go define your entry. And once you understand the language of entry, you'll always know whether or not you have room. And guys, remember, we're trading the fight. We're waiting for the fight. We're anticipating where the fight is most likely to be lost. So in an uptrend, everything is going up on your large chart. There's room to trouble on your large chart. And this small chart is just cranking up with it, and it's going, it's going, it's going. You're like, man, my large chart rules are met. I just need a pullback to an area. And that pullback typically starts when the small triggers turn down. And once the small triggers turn down, I see a lot of you doing it. You say, okay, these are the areas below price. These are the areas where entries can come from. And then the entry rules say, you don't just jump in at an area. If you jumped in at an area here, you got run over. Not only do you wait for the area, but you insist, because you're in control, on a reversal bar up. And that reversal bar up, this is the most important part. Both corners of the top of that up bar finish above the small triggers that are against the large chart, because reversals come from what we call the weak side of the triggers. And this is your 1-minute chart reversal to put you back in line with everything that the large chart said, because your large chart said up and your large chart said room to targets. And now from your small chart, there's your pullback to the area, there's your reversal bar in the direction of the trade. It finishes above the triggers. And if you're calculating room to targets, that's your distance. That's how long you have before you hit something that could stop the market. Does that make sense, everybody? It's going to look the same every time. First, it's going to be trend up. Then you're going to have room to targets. Then you have to wait for the pullback to the area. And from a reversal bar on the correct side, that's where the market heads back up. You'll know exactly how far away an area that could create a bounce is from your entry. Triggers are down, room to targets. I wait for the fight. I wait for the pullback to an area. Reversal bar closes on what we call the weak side of the triggers, the correct side of the triggers. That is your reversal on a small chart to put you back in line with a large chart. And I know exactly how far I have to go before I hit something solid that could create a bounce. Guys, this trend trade is, it's not difficult. The pattern is the same up or down, but it requires a level of patience. It requires waiting for the pullback to the area. It requires waiting for a clear path, waiting for that close on the correct side. Once you enter this trade, there's no surprises on management. And this is kind of a foundational management approach for you. On your large chart, you're going to say, hey, the triggers are up. I'm only going to look for longs. Here's price. I've got room to trouble. Let me go to the small chart. Guys, on your large chart, wherever price is in comparison to the small triggers gives you an insight on the momentum of that move. It's either going to be left, and this is whether the market is up or down. It's either going to be left of the triggers, right of the triggers, or inside of the triggers. The left side of the triggers is what we call the strong side of the triggers. And the strong side of the triggers is where 1 minute areas are more likely to break, or even more so on the 1 minute chart. On the strong side of the triggers is too soon to enter a trade because there's a lot of force behind that move. So this is where if I take an entry, I might say, man, this is cool. I got a good shot to get to that next large chart area. 1 minute areas are more likely to break. I'll protect my investment, but I may not exit too soon. If I'm on the right side of the triggers, not versus wrong, but literally left and right, and whether it's up or down, it's always the right side, I'm on the weak side of the triggers. This is where entries come from on the small chart. This is where reversals typically happen. So if I'm on the weak side of the triggers, I'm still looking for longs. But when I hit that 1 minute area, I know that that's the most likely scenario for a bounce. So before I ever enter that trade, I might say, you know what? I'm going to get paid at that 1 minute area, and then I'll just wait for the next trade. If I'm not strong or weak, I'm in transition. And I call it transition because on a 15-minute chart, you may get bars that extend from weak to transition to strong, or from strong to transition to weak. Guys, this is where partial profits make sense. This is where getting paid at something in front of you, but maybe holding that next contract, seeing if it wants to go further, getting to break even. You'll have your management plan sorted out before you ever take the entry. And the entry rules are the same and the reads are the same. And if the triggers are down like they are here, do I have room to the next area of trouble? And the answer right now is no. I've got 1-to-1s right here. So I'm not even looking for an entry on my small chart. So a couple things need to happen. I either need to get south of these areas, or I need a full reversal and get a clear path up. And until one of those two things happen, I'm in my 90%. And then let's go to NinjaTrader and see what NinjaTrader says. I open a lot of stuff, sorry. NinjaTrader, the most current bar, there is no separation between the small and large. Price has reached a line, the triggers are above. I don't have momentum, nor do I have a clear path. Does that make sense, everybody? Some of you are going to say, well, look, I've got to take a short trade. Everything is red. Well, you don't even have an area inside of triggers. The market's going to go down. I know it is. Well, you don't have a clear path. I need this one to be a winner, so I'm just going to jump in. Guys, you're trading without rules. And until the trigger lines start to break below 69.13.25, you're hoping. You're pooping in one hand, wishing in the other, and you always act surprised when one fills up before the other. Guys, your best chance comes with having the momentum, the potential to break. Does everybody see that tail? Pull back 2 ticks. Oh, nope, doesn't fit the rules. Areas are on the wrong side of the triggers. Sometimes it's not your money. Look at the termination. Look at the termination. Look at the termination. why are we so arrogant to believe that our only recourse is to trade directly into an area that could stop the market when we knew full well that's the most likely outcome? That's a pretty good example of why we respect these lines live. Guys, the methodology is sound. The plan is proven, it's tested, it's verified, it's validated. You've got to start at step one. You've got to say to yourself, if I'm on NinjaTrader, I need momentum, clear path, and entry. I'm going to learn how to make money the easy way so I can begin to see more. Because all three is the high probability. And a high probability trade means, excuse me, each indicator on every chart agrees with the rules for the trade. This is the best of the best. This is my foundation. This is going to teach me to be consistent as a brand new user. This is going to teach me to be patient as a brand new user. This is going to teach me where the market should not go as a brand new user, where the market is likely to continue, where it's likely to go. This one trade gives me everything that I need. This is the golden goose. When one of my advantages goes away, and I don't care which one it is, if one of my advantages goes away, I'm instantly in the frame of mind that this is no longer high probability. This is medium probability, which means that most of my indicators line up for a trade. However, a small issue exists. My issue is that one of my advantages is gone, which means if I take this medium probability trade, it's imperative, one, that I lean on the other two advantages, but it means that I'm going to manage it a little more assertively. I'm going to take profits just a little bit quicker. I'm going to get to break even just a little bit faster because I know what I'm up against. And if 66% of my advantages, 2/3 of my advantages goes away, now me personally, I say, why on God's green earth would I even consider an entry with 2/3 of my advantages gone? You guys are going to have to get to that point. And the thing is about day trading, real talk, campfire talk. Guys, you're in control. And I think that we forfeit that control too often. You're in control of the entry. You are the only person that can press that button and put yourself in a position. When you know what's working for you, when you know what's working against you, this is going to help you make decisions, guys. Your decisions won't be based on hope and wishing and wanting. It'll be based on what you see, the advantages that are present. You get to decide whether to enter that trade. You get to decide how aggressively you may need to manage it. Trading can be a position of 100% control where you never have to give it up. You'll take what the market gives you, but you'll control everything that you're in control of. On TradingView, direction, clear path, and entry. That's your high probability. Once you give one up, you're medium. Once you give two up, you're a Yahoo, right? So this classroom isn't designed for me to be the trade police. This classroom is not designed for me to tell you when you should or should not enter the market. This classroom is designed 100% to give you rules that have been proven to win more than they lose. This classroom is 100% designed to give you feedback on everything that you present in the room, to make sure that you're reading your indicators properly, that you're in the best position to make good decisions. This classroom is designed to give you a simple plan and teach you how to execute it. It's going to be up to you. My trading police car. It is up to you to do the study. It's up to you to take the pictures. It's up to you to annotate the charts. It's up to you to present in the room. Guys, I have bought ellipticals and I have kept my fat ass off of those ellipticals and I didn't lose any weight. I've paid for diets and not followed them and I didn't lose any weight, right? I bought a hammer, sat in a box for years. It never built anything. You've got to do the work. You've got to learn how to use this amazing tool. I'm here to help you. So as we move forward with the rest of the day, assuming that there's trades to be taken and you guys present, post them in the room to get the best feedback out of me. If you're on NinjaTrader, guys, this is what I require. This is the only time I get needy with you guys. I want you to talk about the momentum on the chart. I want you to talk about your path. And I want you to define your entry, guys. I want you to tell me what you see, what you did, why you did it, and I'll give you a private session. Guys, this annotation isn't for me. I can look at your charts and know exactly what you did. Hell, I know exactly what you were thinking. This is for you. Because when you say, my smalls were below the large, the colors all match, these were strong, rule number 1 is met, you're reinforcing the idea that this is what your advantage looks like. When you say price has not reached support, 3 triggers are through the previous line, this area has the potential to break. By telling yourself it has the potential to break, you know that you're going to manage it a bit more assertively. You're knowing what you're up against before you ever look for an entry. Guys, you're writing the recipe for success with good annotation. On a trading view chart, if you really want to get to where you want to be the fastest, take the time to type out, small triggers are down, my rules say only shorts. Small triggers down is cool. My rules say only shorts is reinforcing the idea that that's the only direction you're looking. Price is on the strong side of the triggers. What does that mean to you? Type it out. Room to targets. Small triggers rolled up, so I looked for a pullback to an area, then a down bar that closes on the correct side of the triggers with room to trouble. Guys, that is a textbook trend trade. It is annotated. I've written out the recipe for success. All I need to do is follow the recipe. Are there any questions? Whoa, look what that termination condition did. Am I the only one that's like, holy shit, this software is good? And then there's momentum with the potential to break. Whoops, hold on. And price didn't reach the next fib. And it pulled right back to areas inside of triggers. Egads and little fishes. What a pattern. Pretty awesome, right? You got to learn it. Once you learn it, man, what does John always say? You've got the golden goose. Don't turn it into fried chicken. All right, guys, that's my first hour. I'm going to take a little walk around, stretch my legs, go high five my wife. You snagged it, Pete? Awesome. When I come back, I'm going to click on the pictures that are posted. Wayne, are you going to be around? I'll get yours too from yesterday. And we'll talk about it. And Wayne, I'm going to ask for forgiveness right off the bat. Your charts are freaking difficult to read. They are so jumbled. Let's figure out how to get you better feedback. When we look at it, remember, guys, I got to figure out what you're saying. And I don't know where to start or finish, Wayne. Right? I don't know where to start or finish. There's so many arrows, so many directions, doing so many things. If you could figure out a way to simplify this for me, that would help. But I've got 4 vertical, 3 vertical. I know the large chart's good. We're going to figure it out. I'm just letting you know that if I struggle a little bit, don't take it personally. We usually get to where we need to be, and you're always here to correct me. But there's a lot going on, which I love. And I loved your charts, by the way. Guys, I'll let you watch the S&P for a minute. I'll be back. Read bars left to right. Well, no shit, Wayne. Forgive me. I know which direction the bars go, brother. But there's your entry. There's your stop. But then you say actual was here. So I like that. You're pointing it out. I'm just telling you, if I get lost, be patient. There's a lot going on this chart. That's it. I'll be back in about 5 minutes, guys. Go stretch your legs. It might be 7 minutes. I'm not sure, but I'm going to say back in 5. second half here. And Wayne, I will tell you that your chart was way easier to read after a cup of coffee and being awake more than 5 minutes. Let me open this one up. I feel like, and guys, this is one of the pretty cool things about what we do, is what you'll find is that we really do learn how to talk to one another. Everybody has their own language. And if I'm confused, I don't mind asking for help. So bear with me if I ever ask for help. It's not a commentary on your ability to annotate. Just sometimes I need help. But Wayne, I think this is pretty good. Broke the zone, right? So let's look at the large chart first. Triggers are up. You say you have room to trouble, and you're on the strong side of the triggers. Your entry is at 42, which gives room to the large chart. And there's your break, and there's your pullback. And you wanted to take the entry here, got you in a little higher, dig it. I love the white bar pattern that gets you into Fluent Redneck. Amen, Ron. Wayne, has Trina shared that one with you? And I think you already know it. That white bar up and then the next bar opening above it, that always gives me warm fuzzies in a trade. Yeah. So for me, once that goes, right, you get in and then it looks like you add on. I'm not sure why you're out at 7 ticks. Was that an accident? Tried to place target one here, reduce contract, but hit before you could confirm. Okay, I got you. So you just re-entered the same trade. You're like, trade's not over. Here we go. Well, 3 in, 3 out, and you're like, I didn't want them all out. Let me put 3 back in. Let me get out where I was supposed to get out. I like that. Nicely done. I see what you're saying. It just kind of got split on accident. And then I see 6 directly into trouble. Maybe that's the next picture. So there's your little prairie dog. There was your exit. First exit, second exit. 47, you catch it as it's breaking above. Ran up to one-to-ones inside zones and get paid. And then it had already reached trouble. So now we're no longer in the room to trouble, right? And you go 6 again. Into trouble, hoping those strong triggers push it. And it makes you sweat, right? And the smalls are below the large. And it makes you sweat. And there's a down bar and you're like, oh, crap. And then you're out at the one-to-ones. The same one-to-ones that you already been to. You countered. You went short here. So I was trying to see how much room between zones by setting stop loss and profit targets with entry out of the way. So I thought I got hit on this bar. Disregard 3 contracts and the totals. We'll do math in my head. That's math. So you went short, got in long, away from zone, not momentum, stop loss there, out there. You said you countered. Which one is the counter? There's in 3, out 3, 47. Oh, was this your counter? You went short at 46 and it got you? 46.8. 46.8. Just directly into trouble and they stopped you out? Okay. That's tough. So, same concept on the white bar, Wayne. This is good. This got easier here. It didn't get you. That says 47. That says 46.8. 47 is 2 less than 46.8, right? Wouldn't that be loss of 2 ticks? Am I doing the math wrong? Do you see how this is difficult for me to to figure out? Everything says up and you went short. It says you went short. Okay, you went short 6. Or did you go long? See, this is where I get confused. Forgive me. I don't mean to. You went short 3. I see 6. Okay. I don't know, Wayne. So you went counter everything, made a couple ticks, took 3 off, took 6 off, took a small loss on the first half, zone to zone. All right. These numbers don't jive with it though. That's what's confusing me. Short from 30, from 43, 46, 8, which is right here. And then it says 3 off at 47, which is right here. I believe you, 100%. I believe you 100%. I just don't necessarily understand by looking at it. Did I mention that I failed college algebra 4 times, though? And that could be very much a part of it. Do you have any questions about what you did? Do I need some clarity to give you good feedback? Because I don't see a short here. I don't see room. And I love that you got paid, but everything says up and strong. I don't even see a bar pattern or the correct side of the triggers for a short. So you fought everything and you pulled one off. Good job. High five. Momentum with trend, counter trade, using trade entry to calculate ticks. I don't know what that means, but got hit. This really fast market made 2 trades. That was the one that you went both ways. The results say you got a pretty good plan and you're consistent. And I know that you are. And I don't understand your counter trade, but it looks like it worked a lot better than it looks like it worked, which is awesome. And you're trading from the 15-minute. This is what I like about your counter trade. Everything says don't you dare go long. And you found a way to go short. And I think that's pretty cool. And that's one of the trades that I have in my plan is if I reach a zone here, but I'm looking for that bar pattern. I'm looking for that white bar with an open below. Very similar. Good job, Wayne. We always get there. That one confused me a little bit, not gonna lie, but that's okay. We always get there. Entered on the white bar up, got paid on the white bar down. Right on. Trend is down. Strong side. Room to targets. Just a little momentum trade, huh? In at 91.1. You are trading into trouble. But with everything strong and nothing in the way and odds favorable momentum, you take a shot, and the shot works beautifully. Should have done, entered here. Half off at the first zone, second zone, right on. And you know on the momentum trade, that little snapback gets you in at like 93.4 with virtually no risk on that zone. When it breaks and pulls back, that momentum style entry cuts your risk down by like a lot. And you have the same one up here too. All the momentum breaks below, pulls back. That's a momentum trade. That's a momentum trade. And then it just runs. Great stuff. I love that, man. When everything is strong, just ride that strength. Good job, man. Strong triggers, potential to break. I love this, guys. Momentum style entry. And when a momentum style entry fails with this look, it very often turns into a trend trade. I love it. Doubled up at the pullback. Boom, boom. Nicely done, Pete. Everything says up. Jump the fudge in. Get paid. Out with a loss of momentum right before trouble. Everything's still screaming, get in after trouble, get paid on the way up to trouble. Momentum and path, my friends. Momentum and path. Dun, dun, dun. Strong trending market. Pull back to support. Manage it assertively because it's coming from the wrong side of the triggers. Great management. Nicely done, Pete. And then the pirate trade. Remember when I said once you learn momentum and path, everything seems to be possible? Once you learn momentum and path, there's more opportunities. Once you learn momentum and path, it opens doors, guys, because if you can't go short directly into one-to-ones with weak triggers, into fibs with divergence, well, you might find a way to go long the same way Wayne did. And this is what Ron did too. Wasn't planning to be on this late, but wanted to see what happened in the last hour of the day. Probably won't miss it again. Great job. Counter trend, guys. It's way more assertive, but it can be done when it's coming from those areas. Not hard to find a plan. Everything says down, all the momentum style trade, out before trouble. Oh, high ticked those sons of guns. You thought you were going to beat them, didn't you? Because your trailing stop is usually right there. Did you adjust it, Pete? Was that a reversal bar marker stop? Oh, no. It maybe just slipped a little bit. That's a great trade. All right. Odds favorable. Didn't quite reach it from the strong bottom. Pull back to the... Well, Pete, this looks just like the trade we talked about a moment ago. Pull back to the area inside of triggers. Stop where the market shouldn't go. Out at the first sign of trouble. Where's the market likely to go? Profitville, population Pete. Nicely done. You guys are awesome. Price reaches support. None of the triggers break. Up it goes. No momentum. They can't seem to push it. Now we're back down into support. And guys, you're officially in a holding pattern if you're following the KISS plan. So it is 10:08 in the AM Eastern. And we currently don't have any rules met on the S&P. And with triggers up, from where the market is trading, I might have room to get back to trouble. But over here, I would need a close on the correct side of the triggers. I would need enough room to make money before I hit something solid. And none of that's happening. So I don't have rules to met on this chart either. And look at that. Then the opening bar, and they just can't get their poop in a group. They're trying. So what do I do if there's no rules met? How am I supposed to react? Well, I suppose I could do nothing, right? I could open up the internet and I could say, you know what? MSN Casino is probably a better choice. I'll play a little blackjack. Or MSN Gaming Zone is better. I'll go play a little Scrabble. Or I could hope that support breaks. I could wish that the market would reverse. So it's just a matter of waiting for me at this point, which means that of the 25 people in this room, all 25 of you, if you have a question, this is a great opportunity to ask it. This is an awesome opportunity to ask a question, to post a chart, to get a little guidance where guidance is needed. I have a crazy feeling today's class may not be the full 3 hours. Found our house. We'll be in Georgia on Sunday. We decided we're going to live on a lake for a few months. That will be mission control. Are there alligators in Florida, Victor? I think there are. We're southern Florida too. Keep my dog away from the edge of the water, I suppose. That's pretty cool though, right? Yeah. Uh-oh, we've got momentum. We've got path. Are they going to come get us? What do you guys think? Strong triggers. Triggers through. Areas inside of triggers. I feel like my conditions are met. As long as we don't hit that blue line. What do you guys think? First, it's momentum. Then it's room to trouble. If I get a reversal bar, then my entry is 2 ticks below resistance inside of triggers. If I get my entry, my stop, I already know, is going to be where the market shouldn't go. I think the house has a pretty good embankment. I don't think alligators can crawl up embankments. It's got a boat slip in the back, so might have to start fishing. Are there any questions about what we're looking at here? Everything starts with momentum on the large chart. Separation between the small and large. Sometimes you got to make a judgment call. Is that all 4 triggers below? It looks like it. We're close enough for me. All we need is the fight from the small crowd, right? Oh, dang it. I guess that one ended. Short was the right call. Just didn't come get us. That's a phrase that I call not my money. It's just not my money. If they don't come give me my entry on my terms at my spot, it's just not my money. It belongs to somebody else. It's okay. It's early. It's early. Do I have anyone in here on demo? Do I have anyone in here evaluating the software? Maybe you're kicking the tires, you're in the funding company and you saw one of my videos and said, I think I'll follow the link and go see what the Discord room's about. Boaz, strong triggers, nothing in the way. You try the momentum entry. It doesn't work, but it pulls right back. You get in with the close below, stops in the right spot, and you make money with all that momentum and room to trouble. Nice trade, Boaz. This is one of the things I'm not sure you guys realize. Good morning, Junior. Good to see you, man. This is one of the things that I don't think a lot of you really realize. So that entry is like 98, right? Boaz, that's 2 contracts that all you did was pay commissions on. That's it. All you did was pay commissions on them. That's one of the things, guys, about these jump-in entries. I get it. I hope it goes. There's no room. There's just no room to target. So what if that one did work, Boaz? Where's it going? Nowhere. To the same place right here that created a bounce. That's that patience piece. That's that, oh no, it's going without me. I just thought I would point that out. Didn't make any money at all on this contract. All you did was pay commissions, right? But when you take the right entry, so much easier to make money with room to trouble. Great job. It's a nice trade. Good job. Boom, 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 boom. They're killing it, aren't they? Look at that. Right back to the divergence low. That's where the buyers stole their momentum last time. Now we're starting to break. Now I got a strong trending market. All of my trigger lines are below trouble. Just don't have any areas inside of triggers, which means I can't, under any circumstances, have rule number 3 met, which is kind of a pain in the butt, right? What am I supposed to do? I don't know. Go read a book. We'll pull up the NASDAQ too. While that loads, we'll come over here. Triggers are down. Uh-oh. I've got room to trouble. Uh-oh. Well, I had room till we get to 65. I would need a pullback. Did it give an entry up here? Pull back to the area? Not quite. Not quite. You know, the hardest days for me to teach are when the market's not giving it up and you guys don't ask questions. Has anyone ever heard me say, once you get to the wrong side of the triggers, you don't know if, when, or where the market's going to stop? Look how fast the NASDAQ is. There's your up bar from support inside of triggers with odds favorable momentum. There it goes, straight to resistance. Now it has the potential to break. Clearly there's a reaction off of resistance. It's pushing down. There's the area inside of triggers. Divergence is the biggest killer when it's only the potential to break, and sure enough, it holds true. And now we have odds favorable momentum down, and there's your reversal bar. And let's see if we get a pullback back to triggers inside of, look at that. Look how fast this is. That's pretty crazy, isn't it? Oops, hit my termination. Have to cancel my order. Can't go short anymore. Guys, if you're not in tune, you're going to miss it way too fast. Way too fast. But Bo has the exact same look, right? Look at that. It's the exact same look, 100%. But if the market's trading too fast, you can't catch it. That's one of the challenges with the NASDAQ for you newer users, is it is so stinking fast. It's fun to watch though, so we'll just do this. We'll just watch the NASDAQ, and unless you guys are posting pictures and asking questions, we'll just talk through it. Triggers aren't wide. They're a full bar away, more likely to come down and touch support than it is to just arbitrarily go back up. If it does go back up, it's not my trade. Dun, dun, dun. And let's see what they do. There it is, little lower push, going back, trying to close the gap to the triggers. They most certainly did. Now I have a termination condition at the bottom. I don't have momentum. The market is reacting. Holy smokes. Rules, rules, rules. Pete, everything is screaming down and there's nothing in the way, and you jump the fudge in just below that big ugly fib and make money. I mean, my goodness. When everything says down with strength, let it clear the ugliness. Take it to the next ugliness. Great job, Pete. Termination condition is still holding, but I don't have momentum yet. And if this market continues up more and more, I'll see momentum grow. My large triggers are up. My small triggers are up. I need them to get a little wide. There we go. Like sharks about to breach. Termination, termination. Oh my gosh, termination for the win. Now the market goes down directly into support. None of the triggers broke. Divergence low. None of the triggers broke. Now we're at the fib. Oh my gosh, look at the fight. This is awesome. No triggers through. Doesn't fit my plan. If it goes down, it's not my money. Do you guys ever just watch it and talk through it? Did you know that if you talk out loud, you'll become better at this? Now there's all the momentum, 3 triggers through, potential to break, odds favorable. Everything says down. I've got one area inside of triggers if they decide to come back up. Area is no longer inside of triggers, no longer my trade. That's how quickly it happens, guys. There's your pullback to a mid-band, but the mid-band's on the wrong side of the triggers. Once I get to the wrong side of the triggers, I don't know if, when, or where the market is going to stop. Sure enough, they're trying to go down, haven't been able to. There's a little push. Oh, nope, it's not. Oh, yeah, it is. My goodness, there's a fib with weak triggers, 1-to-1s, pink 1-to-1s. I've lost momentum. Did you guys know that you can market replay and look at this right here and just do that? Area likely to hold, area potential to break. Absolutely no short trades, weak triggers at a termination condition. It was like, Mark, read the markets live. There it is on the NASDAQ, 100%. 3 divergences in the same price range supports the idea that the market may have put in a bottom, but until these large triggers roll, it has not put in a bottom. And sure enough, they go back to retest it. Are they going to push through? I don't know. They don't send out a memo. Someone knows about it. Look at that small chart. And guys, that's a 13.2 on the small chart. Your large chart's at 34. Ooh, they got through. Strong trending market, my friends. Look at it go. Who pissed off the NASDAQ? Guys, what can I do for you? What's going to make you happy? What's going to make you smarter? What's going to fill those gaps? What are you lacking? What can I help with? Whew. Man, that's a lot of down. That's a lot of down. Same guys that pissed off the S&P. Amen. Hey, look, there's one of your big fat fibs. Pete, you want to see if there's a reaction at it? Is that where they were trying to go? Might be, right? Are we going to run out of fibs? Whoa, look at that. Someone knew about that number, didn't they? Holy smokes. Come back to the large triggers, really? Because those define where the retracement may go. Are they going up from there? They're trying. Not yet. No rules, Matt. Nope. Uh-oh, pivot, stop out. Are we going to get momentum to the downside? Potential to break? Or are they going to head back up? Does anyone know for sure? I don't. Let's keep talking through it. Termination. Don't have momentum. I can't go short. I don't have anything met for long. That's a great looking entry, but I don't have rules met. Am I the only one that does this? Like when the market's moving like this? Uh-oh, termination. There's your reversal, but the smalls are on the wrong side, and I didn't have momentum. I can't go long yet. I don't have a clear path down. Son of a gun. Look at him dance right at that key area. Someone made that. Now I've got potential to break down. I've got room to targets. That was a pullback to an area inside of triggers. That's too fast for me to take. There it goes, little reversal. Smalls are on the wrong side of the large for momentum. Don't have the clear path. Guys, look at that dance. Remember when I said decisions are made at key areas? That's what you're witnessing right now. This is buyers and sellers duking it out for supremacy. Sellers have the edge though. Look, smalls below the large, but there's nowhere for them to go. Buyers are trying to push up, but the sellers say, no, we want it to go down. But the buyers are like, seriously, we want it to go up. And the sellers are like, we told you, you damn buyers, we really want it to go down. And the buyers said, no, we'll steal your momentum. And the seller said, I'll see that and I'll push down. And the buyer said, triple dog dare ya right here. And boom, there they go. And the sellers say, get bent, buyers. We're going down. I wonder if Novak wants to pull back to a mid-band inside of triggers. And if it happens, guess what? That's a rules met trade. Oh no, they missed us by a tick. Those rat bastages. Look at that. That would have been a nice one, don't you think? How about this one? Does that one fit? Come get me. Come get me. Come on. Come on. I know where I want you. Nope. Wrong side of the triggers. Got to cancel that one because I don't know if, when, or where that market's going to stop. Oh, avoidable loser. Thank you, rules. Guys, this is so much fun, right? How does he know? Uh-oh. How does he know? Because I know my rules like the back of my hand. Price reaches resistance. All the triggers are below. Absolutely no long trades. Nope, not even two triggers through. Now it's two triggers through. Divergence is the biggest killer of this look, especially when it's not a termination that reverses the market. I got to insist on a clear path if I want to go long. Now I've got a clear path. I've got an area inside of triggers. You think they'll come get me? Momentum, path, stop where the market shouldn't go. Let's see what they do. Uh-oh, three divergences. That's a pretty bad look. Got to get out with that many divergences in the same price range. Why? Because three divergences in the same price range could stop a market. Got out break even just in time on the third divergence. Now they've got to break above it, and now I don't have the momentum that I need. Can you guys react that fast? Do you know your rules that well? No divergence, no momentum, no trade. Wrong side of the triggers, no trade. Odds favorable, potential to break, only two triggers. Plan says three. There's three triggers through. If it pulls back, where's the market most likely to retrace? Right about there below the mid band. Where does the stop have to go? Up above those trigger lines. Oh, those sons of guns didn't get me. Maybe they'll come back for me. What do you think? This is kind of fun, isn't it? There we go. A couple ticks below. There's our NASDAQ pushing up. Move our stop behind a reversal bar. Let's just see what happens. Pulled back to the area inside of triggers again. Market's continuing down. Another pivot, another stop. Let's see if it continues. Whoop, there's some targets. We'll just let the ATM run and see what it does. I can't lose on the trade. I've got a trailing stop. I've got my second target in. Second target's down here at 60.75. I love that. It's before trouble. I can't lose. There's multiple divergences, and that's what takes me out. $400 winner. And now we're sitting on our hands. Did you know that if you know your plan, you can make money in a market that moves this fast? If you know what you're looking for before it happens, the market doesn't sneak up on you, guys. You know exactly where your entries come from. You know exactly where the market is most likely to continue with the advantages, and then it's just a matter of waiting. I used to watch John Novak do this in the NASDAQ, and it absolutely floored me. How does he do that? It's so fast. Well, it's because he knows exactly what he's looking for. The same way you will, with a little bit of study, with a little bit of time. This is why three divergences are an exit condition, because very often that happens. It doesn't mean that the down move is over. It means that it may push up higher. Pete, everything down, jump the fudge in, get paid, get out with a loss of momentum. Like a sniper. Multiple divergences. There's the push up. Small triggers up. Large triggers are turning. It's only the potential to break. If divergence prints, absolutely no trade. Not from a strong bottom. My plan's not met. Guys, what do you want to talk about? We can do this for an hour and a half if you want. I'm totally cool with it. Divergence. Ha! Most likely to fail, and it did. Small's below the large, large or wide. There's my area inside of triggers. There's where the market shouldn't go. NASDAQ is fast. Probably going to take a loser on this one. Oh, look at that. We didn't, did we? Third divergence, we have to hit close. If we don't get the third divergence, there's some profits. Now we're break even. Third divergence, we're out. We made money on that one too. Does the software work? You're damn right it works. Is the plan a good one? You better freaking believe it's a good one. Are you capable of reading your indicators this fast? Probably not, but that's okay. Could you be? Absolutely. How? You guys want to know why I can do this? It's not because I'm smart. I guarantee that. 19,551 pictures. 19,551 pictures, annotated charts, patterns. I've got a plan that I know exactly where to enter and how to manage. There's no guesswork in my plan, guys. You can get to that point. I never talked about the money though. Did you guys notice that? I said this is where the market's likely to continue. This is an exit condition. Never talked about the money. Didn't get caught up in the adrenaline of a market that's moving fast. I watched that large chart, not the small chart, because the small chart is going to talk me into things that I shouldn't do. The large chart will tell me when I have advantages. Time on the pond, Pete. Amen. It's all it is. Time on the pond. Time on the pond. Small triggers are up. Large triggers are down. There we go. Now there's momentum, right? Potential to break. Unless I hit those pink 1-to-1s, and then nope. There's my termination condition. No triggers through. All right, now it's potential. Do you guys see any areas inside of triggers? Clear path. We got one spot right at the bottom there. But I'm losing momentum, which means without separation, rule number 1's not met, which means I'm not allowed to activate that order in front of you guys, because without momentum, I don't know if the market's going to push up. It did, but I didn't know it. I don't have any areas on the correct side of triggers or inside of triggers. They're where the market shouldn't go. Price reached yellow 1-to-1s, weak triggers directly into it. They all remain below. That's a termination condition. Let's see if there's a reaction. Not this time. Same thing at the fib, weak triggers at a fib. Let's see if there's a reaction. The reaction is, F you, fib, we're going up. Now it's strong trending market. I've got a clear path, but I don't have any areas inside of triggers, guys. I don't have any way to define an entry. Because once I get below those triggers, I don't know if, when, or where the market's going to bounce up. So it could be a fib, right? There's a bounce. Maybe that was it. Yeah, maybe. Some of you use reversal bars when you can't define an entry, because 2 out of 3 means medium probability, manage if something changes. I can't take that one because it doesn't fit the KISS plan, doesn't fit the plan. But that's a very real. Boaz probably caught that one if he was quick enough. That's a Boaz trade. Yep, all 4 triggers through. Room to trouble, pull back, wait for the confirmation, and giddy up. That's another one of the cool things about when you guys post in my room. I learn your plans. I learn what you do, which means that you've got somebody to help hold you accountable when you start breaking your rules. I feel like that was a pretty good display of chart reading. Big ugly fib. Look at the reaction as you get there. Isn't that cool? Why are 3 divergences a termination condition, Mark? Well, I'm glad you asked. Watch this. The buyers are in control. They're like, ha ha, we're going up. Life is good. Nobody can stop us. And the sellers say, well, you know, we're going to test the waters. And the buyer said, that's a key area. No way, we're still going up, right? That divergence is the sellers testing the water. That divergence is the sellers testing the water. Are the buyers going to keep pushing? Are they going to fight us when we get to this key area? Another divergence, another push down. And the buyers are not letting go. And the sellers are saying, you know what? It's just too soon. We tested the waters. They ran us over. It's just too soon. And we'll see if they test the water again. Nope, they've got their next number. Maybe it's all the way up here. I don't know. But now we've got the strong trending market. We've got the clear path. That's your area inside of triggers. But right at that fib, sellers say, now you've gone far enough. And the buyer said, yeah, but we like mid bands. Maybe we'll give you a push. And the sellers say, oh, you can try. But when you get up to this fib, there's a good chance we're going to push back. Let's see if they push back. Regression of the mean, right? Pulling back to those triggers. They'll make decisions there. Buyers are like, oh, we want it to go up. Sellers like, here's a key point. Let's see if we can rally the troops. And the buyer said, oh, we're not having it. We didn't get to our fib. And the seller said, damn it, that was effective. Look what they did. Let's keep pushing, guys, keep pushing. Triggers are down, we're below fibs, keep pushing. And the buyers are like, but we want it to go up. And the sellers are like, but I told you no. And the buyer said, we've got a lot invested and we didn't reach our targets. And the seller said, you know what, we might let you push up, but if you hit 62.75, we're going to push even harder. That's our line in the sand, but they're at a fib. That's how my brain works. There's a fight. Boom, Boaz. Chicken. Just kidding. Great trade. How did I know he was going to do that? Because Boaz has a trading plan that says he's obligated to do that if his rules are met. Nicely done, Boaz. Perfect, like clockwork. Same trade every time. Look at the fights, right at the fibs. Whew. Don't have momentum down. Don't have a clear path down. Don't have a clear path up. Let's let them come back in line, right? Look at that. Sellers stole momentum right at a fib. Sellers did it again. Guys, sellers took control. The sellers took control. That's what you call a victory. But now they've got to get through here. And if they start pushing, the buyers have some spots. No separation. It's not momentum. Straight into a fib. Uh-oh. Sellers are serious, aren't they? 2 triggers through. 3 triggers through. Pull back to an area. That divergence keeps me out. My plan says not with that divergence. I'm willing to miss that one. Because if my job, and let me show you why. You ready? Whoops. Let me show you exactly why. If the perfect trade, my friends, I know. Let's go through it, Boaz. No trade. If the perfect trade, and this is why I go back to advantages. If the perfect trade is momentum path and entry, Boaz saw it. I saw it. Does everybody see that I do in fact have momentum? The smalls are below the large are wide, there's space between. Rule number 1 is met without question. Does anybody not see that? Everybody sees it. Good job. I've got an area inside of triggers. 100%. I've got an entry area. All 4 triggers aren't below 1-to-1s. I do not have a clear path. Are you guys with me? We don't want to say anything, Mark. What if we're wrong? Being wrong is awesome. It means that's how you learn. Guys, if I'm in a medium probability scenario, I'm leaning on momentum. I'm leaning on the entry area. The entry area is clearly defined. I don't have to lean any harder than that. But I want you to see something. Divergence is a loss of momentum, which means I'm giving up the good stuff for rule number 1. Those small triggers working back inside of the large triggers is losing momentum. I can't lean. on momentum to break this area anymore. My small chart is showing me change that I can't see happening on that large chart. That one blue line keeps me out of a loser. Do you guys see that? That one blue line was enough to keep me from taking that trade. Look what the market did after. It's all about knowing your rules. And now I don't have momentum, but I do have a clear path. I don't have areas inside of triggers. I've got nothing to do, guys. Trading view went right down to support. Boom. That was it. Triggers are down. There's a little bit of room to 63, not much. There's a pullback to a mid band. We'll come back and check and see what they did. Weak triggers. Wow, did you see how fast that went? Holy smokes. There's your crude oil. Look like a lot of trend trades down there. Here's the S&P. Look at that termination. Potential to break. All right. Do you guys see how there's no areas inside of triggers? Instantly, rule number 3 is not met. Instantly, I know before anything else happens that I can't define an entry. Do I have any new people in here? Sitting at their computers going, what the actual F is he talking about? Guys, if you don't know what a strong trigger is, if you haven't studied termination conditions, if you haven't made it through the basics, it all sounds like this. If you are new with me and you're being shy on the sidelines, it takes about 3 days to learn the language. All the momentum, potential to break. The only problem is that my area is not inside of triggers. If I get a reversal bar, I really want that midband to be inside of here, and it's just not happening, which means I'm obligated to sit on my hands, no matter what my opinion is. But market's so close. It really is, isn't it? It's really close. We'll see what happens. We'll come back. Uh-oh, that's my untitled workspace. I don't know about you guys. I have a blast just doing the chart reads. Look at that. Termination. Zing, bang, boom. Midband is not a termination if the large triggers aren't a full bar away. So technically that's your short. Stop where the market shouldn't go. Pull back to the area inside of triggers. Stop where the market shouldn't go. Hide it behind a reversal bar. So now our risk is minimized. Now it's just up to the market. Got a lot of room down to trouble. Doesn't guarantee a win. Uh-oh, second higher divergence. That's a pretty good red flag. Let's see if we get stopped out from it. I love Simulator. I can do this all day long. Yep, I would have been too, Boaz. Closes the gap back to the triggers. And now there's nothing to do. But guys, I stayed in there because I want you to see something. A second higher divergence becomes an exit condition for you guys, which means that I could have been out right here at 42. Instead, I was out. Sorry, that was 82. At 88. 6 points, $120 per contract higher. So that's where management starts to come in. Sure enough, it closes the gap to the triggers, as advertised. There's a second lower divergence on the large chart. Small's below the large. but I see 3 divergences in the same price range. So now I'm sitting tight again. Management is a great way to hold on to money. Boaz, if you got out of that one, that was great management. Great heads up. And those little bits of money add up, guys. That $100 here, $100 there. Saving one $100 mistake a day every day of the trading year is like a $26,000 credit to your account. My wife is baking cinnamon rolls and they smell amazing, in case anybody was wondering. It's the shortest week ever, right? One day. Odds favorable. Nothing in the way. Are we going to try it again? We know where the market's most likely to bounce, right? Right in an area, inside of triggers, with momentum, and a clear path. All we need is for them to come back to us. Why won't they come back to us? Whoops. We hit stuff. Gotta stop. Price reaches an area. Triggers remain above. Not allowed to take a trade. My rules aren't met. With the fingerprint. How we doing? Is there anything I can do for you? Andy V, how's your world in Montana? How's trading? Wayne, Jeffrey Dean, Chariot, Todd, Edwin, Andy, Izzy, Aaron, Vad, Koki, Miss Kathy, nice to see your smiling face. Joe, Mark, Pete, Z Robot, Tesla Nerd, what's going on? Cedeno, joined today. Welcome. Are you demoing the software or are you coming in on the trading side? Nexgen Pro Trader funding. Odds favorable, momentum, clear path. Where's my triggers? There they are. Where's my areas inside of triggers? There it is. Boom. Oh my gosh. Run me the fudge over. That's the NASDAQ for you guys. And then it turned around and gave you the trade the other way. New trader on Nexgen. I love it. So a little bit about what we do. And the NASDAQ is not normally a training tool, but nobody is talking. So I'm flapping my gums. Do you have TradingView? You already have TradingView? I'll get you set up. Some of you are like, Mark, why would you take a loser in front of people if you guys are selling software? Because it's a part of it, guys. If you already have there it is. Sorry, I had to scroll down. Take your TradingView ID and you're going to send it to Jason in Tech. Who are you working with? Just curious. I'll get you the link to it. If you send your TradingView ID to Jason in Tech, he'll get you all of the indicators. And it's the same thing. So when you demo, you can demo either. What you're going to find during your demo is that the first couple days are confusing. There's a lot coming at you, and I fully get that. Learn some of the language. Learn how to identify the areas. Learn what a trigger line is, and all that's laid out for you. And what happens is you'll be able to take the idea, and NASDAQ is so stupid fast. I don't recommend it for new users. You'll be able to know right where the market is likely to stop. You'll be able to use momentum to know when it's likely to get to those areas. You'll be able to see these trigger lines. That's what we call a strong trigger line. And with this look, without hitting that blue fib, very often the market pulls right back to these areas inside of these trigger lines, and that's actually an entry for a trend trade. So I teach this room with the assumption that you know absolutely nothing, and I try to break it down into 3 very simple rules: defining momentum, using Fibonacci to know where the market's likely to go and where it may stop, and defining an entry. And I talk about the same thing every day. True story. Same thing every day. And this document right here, Trend Trade Simple, is everything that I talk about. 5 days a week, 3 rules, 2 charts: momentum, path, entry. It talks about momentum and path being your core concepts. If you learn these two, it opens doors, gives you the rules, the charts they're found on, the indicators defined, rule number one, how to define it, rule number two, how to define it, entry rules, how to define it. I literally hand you everything that you need to be successful with the software. And then I work with you hand in hand for as long as you need me to make sure that your chart reads are accurate, to make sure that your entries make sense, to make sure that your management is your plans coming together. And while I don't tell people how to trade, I teach you to read indicators. Love a short market, fits your ADD. I love it. Getting in on the pullback, giddy up, get paid, get paid. Nice trade, Ed. Going with the trend. I love seeing that with you. Everything goes down. There's your short entry. Making money, making money. Too tight to stop? Well, that's par for the course. When you change your entries every time, it's hard to trust them. But at least you got direction going right, which is awesome. That's yeah, a little tight, but that's okay. You got paid, man. That's what it's about. So I'm gonna ask respectfully, ask me a million questions. Don't be afraid to reach out to me. Anything that you need while you evaluate the software, I want to be available for you. Let me know which platform you choose. And it doesn't matter to me. I'm comfortable and confident on both. I can teach either. But I don't want you to confuse the concepts between NinjaTrader and TradingView because they are a little different setup. These use minute bars where NinjaTrader uses a dynamic Renko bar. Are you working with Forbes, Jim Forbes? Typically his guys come to me with NinjaTrader. Price reaches an area, guys, weak triggers. Look at the reaction. We knew not to go short because the rules said no. Price reaches resistance. There's no momentum. What a great spot for a bounce. And there's the bounce. Ah, good stuff. Whoops, there's TradingView. Gotta love some TradingView. What does it say? It says that the trend is down, but we don't have any room just yet. Trend is down, nowhere to go. Let's sit tight for a minute. If they're really going to break it, they'll break it. Good stuff. So guys, I'm going to leave you with this. I'm going to go take a few minutes. Think about what you want to talk about. I'd love to push it all the way to noon today. So don't be shy. I'll see you guys in a couple. That's a whole bunch of down, isn't it? Man. All right, I'm gonna kill YouTube.